I'm so excited to be here and I hope you're all well and happy and healthy. And what I wanted to do today is go over problem 3-2. I'm going to come in and show you what we've done as far as journal entries, T accounts, building financial statements, and we're going to go over that together. And then, as you know, we have class online as well. So I did want to go over that together with you and come in and film this for you. So let's start with problem 3-2. It talks about a company called Just Rolling Along. It was organized on May 1, 2012 by 2 college students who recognized an opportunity to make money while spending their days at a beach along Lake Michigan. The 2 entrepreneurs plan to rent bicycles and inline skates to weekend visitors to the lakefront. The following transactions occurred during the month of operations. And we have the following transactions. On May 1, they received contribution of $9,000 from each of the 2 principal owners of the new business in exchange for shares of stock. So on May 1, we're going to start our journal entries. And as you remember, we're going to have a debit, a number, and a credit, and a number, and these are the beginning of our journal entries. And we know that there are 2 individual investors at $9,000 each. So we have cash coming in, that's an asset, for $18,000, and stock for $18,000. And when I come back, we'll do the T accounts, okay? But let's do the journal entries first, okay? Again, on May 1, we purchased 10 bicycles for $300 each on an open account. The company has 30 days to pay for the bicycles. So again, we're going to have a debit, a number, and a credit and a number. We'll call it equipment. That is part of our asset category. Bikes. And remember, we have 10 bikes, $300 each. That's $3,000. So we're going to have $3,000 here. 3,000 here, and we have 30 days to pay for these bicycles, so that is going to be considered accounts payable, which is a liability which is current. So we pay that in 30 days. Okay, and on May 5th, we registered as a vendor with the city and paid the $15 monthly fee. So on May 5, we pay the city a registration fee from $15. So we have a debit and a number and a credit and a number, and that number is 15. We paid with cash. So cash is going to be a deduction from an asset is going to be credited on the right side, okay? And we're going to call that a registration expense or registration fee. Okay, and let's see what else. Now, on May 9, we purchased 20 pairs of inline skates at $125 per pair, 20 helmets at $50 each, and 20 sets of protective gear, which is near the elbow, wrist guards at $45 for each. We're looking at a total of about $4,400. And again, that date is on May 9. A debit, number, credit, and a number. And we know the number is $4,400 once we do that calculation. Okay, and how did we pay for that? We paid with cash, so we're crediting cash for $4,400, and we're debiting equipment. Okay, on May 10th, we purchased $100 in miscellaneous supplies on account. So on May 10, we have purchased $100 in miscellaneous supplies on account. The company has 30 days to pay for the supplies, so therefore that would be a credit to accounts payable. be for 100. Okay, and we are paying for supplies for 100 as well. Okay? Let's see, on May 15th, we paid $125 for a bill from a local radio station for advertising for the last 2 weeks of May. That occurs on May 15th. We have a debit number, credit, and a number for our journal entry on May 15th. That would be advertising expense. For 125. Okay, and we paid with cash. So our cash is being credited on the credit entry. Okay. Let's see, on May 17, customers rented inline skates and bicycles for cash of $1,800. So on May 17, we received cash. Cash is increasing, $1,800. And the credit is going to be this for skate and bike revenue. For $1,800. Okay, credit to revenue, as you know, that's a normal balance. And also on May 24th, we billed the local park district for $1,200 for inline skating lessons provided to neighborhood children. The park district is to pay 1/2 of the bill within 5 working days and the rest within 30 days. So that would have occurred on May 24th. Okay, now, the park has not paid us yet, so we're going to consider that to be accounts receivable. For $1,200. Okay, and we're going to say that would be skate revenue. Inline skates and bicycles for $1,200. So we have inline skating lessons. Revenue for $1,200 would be our credit. Okay, what else? Let's see, May 29th, we received 50% of the amount billed to the park district. So May 29th, we have received 50%. So we have received $600 in cash. Okay, and we're going to decrease accounts receivable for $600. Okay, let's see, on May 30th, customers rented inline skates and bicycles for cash of $3,000. So May 30th, we received cash, which will be our debit, for $3,000. Okay, and we're going to credit inline skate revenue. For $3,000. Another sales revenue credit. Okay, and then on May 30th, we have wage expense. We are paying our employees. So a friend of ours who helped us over the weekend, so it's $160, so we have wage expense for $160. Okay, and we are paying with cash, so we're crediting cash for $160. Okay, and then on May 31st, start here. pay the balance due on the bicycle. So our accounts payable would be debited here because we're decreasing a liability for $3,000, and we're crediting cash for the same amount, $3,000. Okay, that takes us through the journal entries. Let's see if we did those correctly. So on May 1, we have a debit to cash for $18,000. That was because two investors put $9,000 each. We have stock of $18,000. On May 1, we have equipment that we are borrowing from the supplier. We have 30 days to pay. So we have equipment, bikes, $3,000, credit accounts payable for $3,000. On May 5th, we have a registration fee for $15, and we have cash credited for $15. That's a decrease to cash. On May 9, we have equipment for $4,400. We have credit to cash. We did pay cash, so that's decreasing. And on May 10th, supplies we purchased, and we're going to have 30 days to pay for that. So the supplies 100, accounts payable credit 100. Then on May 15th, we have advertising expense for $125, credit to cash for $125, and then on May 17th, we have debit to cash and then credit to revenue. Cash $1,800, revenue $1,800. On May 24th, we have accounts receivable at $1,200, and we have skating lesson revenue for $1,200. May 29th, we have cash $600, accounts receivable credit for $600, and on May 30th, cash $3,000. We paid. We were able to receive cash through our revenue sales of $3,000. And May 30th, we have wage expense for a gentleman who helped us over the weekend for $160. Cash is decreasing because we're actually paying this individual in cash. And then on May 31st, we have accounts payable of $3,000, and cash is credited for $3,000. Now, what I'd like to do now is take a look at the T accounts, okay? So let's go to the individual T accounts such as cash. So what I would do here is I would create a T account, and this is considered an asset. And as you know, an asset is going to be a normal balance on the debit side. Normal balance, and to increase will be on the debit side. Here, over here. So to increase will be on the left, to decrease will be on the right. So remember, the very first line item, we had an investment of $18,000 from two investors. So that's an increase to cash, $18,000. Okay, then we go back here, we'll take care of that. We have then $15 for registration fee. We're lowering cash by $15 for that registration expense, which is what we have here. Okay, and then we also have $4,400 that we reduced cash. That's $4,400 in cash being lowered. Okay, that takes care of this entry. And we also have $125 credited to cash here for the advertising expense. And we have an increase in cash, $1,800. That's going to be on the debit side for revenue. It's going to take care of this calculation. And we have $600 here that we are going to increase by the receipt of the accounts receivable. That's going on our debit side as well. And we also have $3,000 that we received for revenue. That's going to be on our debit side as well. Okay, that takes care of this. And we also have $160 that we paid for our employee, 160. Okay, and we have $3,000 that we received. Actually, this is an outflow, paying for the accounts payable. So that $3,000 is going on the credit side. Okay, so let's take a look and make sure that I did this correctly. $18,000, $1,800, $600, $3,000 is on the debit side. If I add these together, we're at $3,400. Let's see, $15,700 would be our net. And on the credit side, we have $15,000, $4,400, $125, $160, and $3,000. We have $15,700 is our net for our cash after we net out these numbers. Okay? And let's see, that's gonna be our balance sheet. Okay, now, and in terms of the accounts receivable, another asset, put that here. Another asset where we have the normal balance on the debit side. I had, remember, accounts receivable, I had 1,200 to begin with, which is what we have here. Okay, and then I'm deducting, because I did collect in the accounts receivable 600, that's going to be a deduct here. So my accounts receivable here are 600, and our cash is 15,700, accounts receivable 600. And we're also going to take a look at supplies. I have 100 in supplies, which is what we have here. Okay, so that takes care of our assets. And as you know, we're going to take a look and see that we have, let's see if we have any other, okay, so we have our balance sheet. Can you see me here?
Yes.
Okay, so here's our balance sheet. Okay, and this is a company called Just Rolling Along. Okay, and the date is for the month of May. Okay, so we're going to look at our assets. As you know, those are going to equal our liabilities plus our stockholders' equity. Okay, so under assets, we have current assets listed first. We have our cash, accounts receivable, supplies. What we're going to do is we're going to take our ending balances. We have cash at 15,700. And remember, we're going from most liquid to least liquid here. Most liquid to least liquid. So we have 15,700 in cash. Accounts receivable, we have 600. And we have 100 in supplies. Now, the current assets, total current assets, I'm going to add all of these together, and I'm looking at 16,400. Okay. 16,400 in total current assets. Okay, now, let's take a look at our long-term assets. Property, plant, and equipment. So our long-term assets, okay, that is considered anything longer than 1 year that we'll be using. We have 7,400 in our equipment. Okay, and our total assets are 23,800. So these are our total assets. And the equipment is coming in from these accounts over here that you see here on the board. I've got equipment here, 4,400, and also the 3,000 that we have here, equipment. So the equipment is a combination of, and again, another asset. We have 4,400 and 3,000. I'm going to add these together. I'm at 7,400. That takes care of, let's see here, equipment here, and 4,400 here. Okay, and let's see what else. We also have our, so that takes care of our assets. So as you can see, the balance sheet is assets equal liabilities plus stockholders' equity. So far, we have in assets, we had a total of $23,800. Those are going to equal liabilities and stockholders' equity. And let's take a look at that next. The current liabilities we have, let's look at liabilities next. So here are our assets. Let's take a look at our liabilities. Current liabilities first. We have our accounts payable. And the accounts payable are $18,000. Okay, and when we go back over here, we see we have accounts payable of $3,000. Okay, we have $3,000. This is a normal credit balance. This is a liability. Okay, we also have $100 from our supplies. We paid off $3,000. That's going to be a debit to accounts payable. And so therefore our ending balance is $100. Okay, and that is what we have. Which is here. Just write this over. It's 100. Okay. Let's see, what else do we have? We have capital stock. We have $18,000 from the two partners. That was the beginning cash that we had here. Okay, so we're taking care of the accounts payable here. Pay that off, which is, let's see. Okay, that's correct. All right. Let's take a look at the accounts payable 100, 18,000 in capital stock, which is what we have here. And we have, that is here, two partners paying $9,000 each. And then we also are going to take a look at the retained earnings. Okay, and how do we receive, where do we get the retained earnings? Let's look at the income statement. Here we have our revenue minus expenses for just rolling along for the month of May. Okay, we're going to have our sales revenue less expenses. So what our sales revenue is what? We have rental fees, and we also have lessons. So rental fees, $4,800, lessons, $1,200. We're going to add these together, total revenue, $6,000. Okay, and we're going to deduct expenses such as our fee of $15,000. We have advertising, $125,000. Okay, and then one more, we have our salaries and wages, $160,000. Okay, so total of $300, total expenses. Okay, I'm going to deduct that from the $6,000. I'm at $5,700 as my profit. That's what we're calling operating profit before interest or taxes. And now, this becomes then, I'm gonna take that into consideration with the retained earnings, because my statement of retained earnings is, can you see here? No? Did you see what I just did here? Okay, good. Let's do statement of retained earnings here. Okay, for just rolling along. Which was May. I'm going to start with my beginning balance of 0. I'm going to add profit, which I just discovered was 5,700, 6,000 minus expenses of 300. You were able to see that. Okay. Okay, I'm at 5,700 here. So my ending balance for May is, for the retained earnings, 5,700, and that is going to be also taken into consideration here. I'm going to add the 18,000 plus the 5,700, and I come up with 23,700 in total stockholders' equity. These two, 23,700. Okay, now, as you see, I have 23,800 in assets, which is here, and my liabilities are 100, and my stockholders' equity is 23,700. So we see these numbers here add up to the assets, which are 23,800. Okay, so I'm going to say total liabilities plus stockholders' equity. I'm going to add these together. 100 plus 23,700. I'm at 23,800. Okay, and that does balance here because I have 23,800 in assets, $100 in liabilities, in equity I have 23,700. I add these together at 23,800, which is the same as my assets. And that takes us through just rolling along in problem 3-2. And I can't thank you enough. I look forward to working with you during this session and the future sessions in our online classes. And I'm Professor Virginia Jean. It was wonderful to see you again. Thank you so much.